How did the market start in 2025? In the first week, we saw gold continue its upward movement, while UK bonds sold off, breaking below levels from the UK bond crisis in 2022, which had caused then the Prime Minister Liz Truss to resign. EU and US bonds also struggled, as they were all down during the first week, driving yields or borrowing costs higher. Meanwhile, the Nasdaq experienced an uneven path. The first week of trading is always significant, as many investors begin initiating and rebalance their position for the year. This opening week has highlighted that the year's market focus will likely center on the direction of bonds and yields, or interest rates. Bonds and yields are expected to serve as a key leading indicator for the rest of the markets in 2025. I'm Kon Hao. My work in this channel is to study behavior science in finance, discover correlation between different markets, and uncover potential opportunities. Before we get into today's subject, please take some time to read the disclaimer. We will first cover what is happening with UK bonds before discussing the direction of US bonds in 2025. How will they affect the rest of the markets? Bonds across the US, UK, and EU have never fully recovered since the pandemic. UK bonds started the year by breaking below their lowest point in 2020, and bonds in the US and EU are under tremendous pressure as well. UK bonds has been trending upwards for decades, but this long-term uptrend was broken in 2022. The same applies to US bonds. What happened in 2022? What caused bonds to transition into a downward trend? 2022 was the year when US inflation peaks at 9%. While inflation numbers have since improved, the bond markets have not recovered. There is an inverse relationship between bonds and yields or interest rate. When investors sell bonds, yields move up. Yields and interest rate tends to move in tandem, meaning they do not move in opposite direction. Let's examine the specific dates that caused UK bonds to break below their 2022 low. After their crash in 2022, UK bonds recovered slightly. However, in September last year, they started falling again. Some market watchers attribute this to Trump's potential increase in tariffs, which was expected to raise business costs and impact bonds negatively. While this explanation may hold some truth, UK bonds prices actually reacted positively to Trump's election victory. The turning point came on December 18, when the Fed chairman announced the possibility of only 2 rate cuts in 2025. Bonds started declining following this announcement. Why did this happen? This is because market watchers had expected more rate cuts in 2025. Jerome Powell's announcement of only 2 rate cuts signal 2 key things. Number one, inflationary pressure are not entirely over. And number 2, borrowing costs could remain high. These could be the other concerns why investors are feeling nervous about the bonds. Technically, since bonds prices have broken below their crucial trend line, I will continue to monitor investors' position in the bonds markets. If they continue to add to this selling pressure, yields across different tenures are likely to trend higher. While many hopes that the Fed will cut the Fed fund rates, the central bank must consider the current state of the yields market. As this chart demonstrates, the Fed funds rate and yields move in tandem. What could this imply for other markets if bonds prices remain low? Stock markets may face some headwinds. As we discussed in our video from July last year, at that time we talked about Nasdaq potential reaching its upper band. And here we can see how it reacted to it. December closed with an inverted hammer highlighting the market's response. With bonds seeming to be under pressure, we can also manage market risk on bonds directly. Here, I've plotted the parallel channel that I've identified on the 30 years bonds. This serves as a guideline for my decision making when the bonds approaches its upper band or lower bands. What about more minute movement? I have fine-tuned the time frame to a daily chart. It is another set of parallel channels on the daily chart. For those who prefer trading on shorter time frames, I hope you will find the support and resistance guidelines useful. I'm watching this round of bond selling very closely for any contagion effects across bonds and other markets. But fear not if we understand what is happening. We can prepare ourselves. I see opportunities ahead while managing the risk altogether. There's always trading opportunities in CMC markets. Go to the search features and type in bonds. You will find the markets that will suit you. We cannot perfectly time the market, but it is possible to get the market timing right. The market are always telling us on their next move. Stay tuned for my coming tutorial. Remember to subscribe to our channel. Feel free to leave any comments below. I love to exchange ideas with you on what is about to come. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.